Hello, very good morning to all, and welcome to today's Daily Dose, and welcome to a brand new work week ahead. And hope that you guys have a wonderful and restful weekend. Very good morning to all, and welcome to today's Daily Dose. I'm Kelvin here. Today will be Monday, the 23rd of September 2024. So before we start our Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term intraday technical outlook on the major dollar pair, the US dollar pair, the major stock indices, and as well as the two commodities that we cover on a daily basis, which is gold XAU/USD and West Texas crude oil, let's have a recap what has taken shape on Friday in terms of the performance of the broad-based cross asset classes and its respective news flow or event, and as well as any data to take note of in today's early Asia session. So let's start on Friday first. So Friday, in terms of the data wise, it will be very light in terms of the economic calendar. After Asia session, Bank of Japan interest rate decision, which BOJ, as expected, keep its interest rate unchanged at 0.25%, but rather issue a kind of a much relatively confident monetary policy statement that they are on a path of interest rate normalization. That means, i.e., there could be still chance that the Japanese central bank BOJ will still continue to hike rates as the months go back forward. But however, during the press conference in Friday European session at around 3 p.m. Singapore time, that's our daily dose, UDA actually sounded rather dovish. So who is UDA? UDA is actually the Bank of Japan chief, the central banker of the Bank of Japan, BOJ. So he sounded rather cautious in terms of the future interest rate hike path of Japan. So I did mention that he actually lowers the risk of an October hike with a cautious hold. Means before UDA actually speaks itself over here, the Japanese yen actually strengthened slightly after the release of Bank of Japan statement and its monetary policy decision during last Friday Asia session at around 11:30 a.m. to 12 p.m. Singapore time. So we do see at that point in time the dollar yen actually see a minor sell off right below the 143.70 resistance level that we highlighted on Friday as well in our daily dose of session. But after Uda's speech of his press conference, that means he held his press conference at the start of the European session around 3 p.m. to 4 p.m. Singapore time, he actually sounded rather cautious in terms of the future path of interest rate hike in Japan. And that actually sent the dollar yen bursting above the short-term pivotal resistance of 143.60. So we got to respect the short-term bullish momentum of the dollar yen. So later I'll touch on more about the dollar yen on the technical chart. So it seems to us that right now the dollar yen is in the midst of a potential multi-day to multi-week mean reversion decline in its major medium-term downtrend phase that is in place since July this year. Later I'll touch more that on the chart. But I want to highlight what he actually mentioned over here is that he flags fading upward price risk. So what it means over here, okay, yep, the upside risk to prices does appear to be easing given the recent yen strength. Okay, so what he means over here is that whatever the Bank of Japan did in July, it strengthens the yen, and the strengthening of the yen has really done its kind of a monetary policy normalization. That means by cooling off imported inflation in Japan. So market actually view his statement over here is that given yen, the dollar yen at this level, that means at around the 140 level instead of the 160 plus level, it should be able to contain upward imported inflationary pressure in Japan. So that actually kind of reduced the odds of a October hike and even a December hike this year. That means there could be a chance that BOJ may not even hike at all before 2024, and it's based on BOJ Governor Uda rather cautious stance during his press conference. But nevertheless, I believe that he is actually allowing the market to guess as well over here, because if you go all the way down, he did mention, okay, where is it? Yeah, because the Bank of Japan in its monetary policy statement actually raised its assessment on consumer spending. All right, and due to the fact that because they're much more confident that consumer is actually spending in Japan at the current pace of interest rate hike, it shouldn't actually dent the consumer confidence in Japan. And also the bank in the monetary policy statement has repeatedly indicated that the real interest rate are still deeply negative in Japan itself. So in terms of the long run perspective, the Bank of Japan is still in the mode of rising interest rate, but it's only that they may actually pause now to actually potentially take into impact of this potential we call it a movement of the dollar yen that has already done to imported inflation. Okay, so this was the news flow that took shape on Friday, right after our daily dose, that causes the dollar yen to actually spike up above the 143.60 short-term pivotal resistance. And also on Friday, the US session, the stock market was rather lackluster, so due to a bit of profit taking over the weekend, where we start to see across the board, the SPX, the Nasdaq 100, the Dow Jones, and the Russell 2000 all actually unwind their very strong push up that was seen on Thursday exposed Fed exposed FOMC meeting. So the worst hit was the Nasdaq 100 and the Russell 2000. Both of them are down negative 0.24%, and the Russell 2000 is down negative 1.10%. And this is actually due to the fact that if you look at the heat map of the S&P 500 on last Friday, we see a series of red by the three mega cap stocks, which is Microsoft down negative 0.78%, Apple down negative 0.3%, and Nvidia actually underperformed with negative 1.6% over here. But what's interesting over here is that during the Asia session, the markets actually rallied back again on the futures market, or the Nasdaq 100 futures and the SPX futures. So later I'll touch on the Nasdaq 100 short-term technical outlook when we go through the portion of the short-term of this aspect of the daily dose. So another important news flow I want to highlight for you is economic data release that has taken shape early this morning at 7 a.m. Singapore time, was the release of Australia manufacturing PMI and services PMI September. So this is a flash data. So you know that PMI, the compiler will tend to release a flash data 2 months before a particular month end. So this is the flash one, a preliminary figure. So this preliminary figure in terms of both manufacturing and services show signs of a deterioration in Australia. So Australia, we know that Australia is not a key it's a services industry as well. I would say yes. I mean they do have some commodities exports, but we should pay close attention to the services side of the economy. So the services of the economy, why is it important? Is now inching back to the break we call it slightly at expansionary mode, but coming very close to the 50 level mark. Anything that's below 50 represents contractionary. So if you look at the trend, previously was 52.5, and it now is now hovering lower at 50.6. So if you look at the trend of the services PMI over here, okay, it's actually on a path of easing in terms of growth since March this year. All right, since March this year over here, which has a high of around 54.5. So if you look at the 3-year trend, okay, it's actually try to actually ease off since March. All right. So now what's important over here is that we know that RBA is one of the, in fact, they are actually the hawkish central bank among the developed nation bank. Like Switzerland has already cut interest rate. You have Euro has already cut in Eurozone, ECB has already cut interest rate. Bank of England, even though they are sounding cautious, but they also cut interest rate in July. But New Zealand also cut interest rate as well, but the only one that is holding the fort right now is RBA, which is Australia's central bank, that refuses to turn a dial because of number one, the central banker still deem as the Australian labour market is still relatively healthy, and the services side, the services inflation in Australia still remains at risk of at the elevated state. That means at a higher level of growth for services inflation. So that will actually be a focus when we turn our economic calendar tomorrow. So tomorrow we do have the RBA meeting at 12:30 p.m. Singapore time. Market is expecting no change at 4.35%. So that's also one reason why in the shorter term perspective, we see the Aussie dollar is moving in a upward movement within a major sideways trend configuration. Later, I'll touch more on that when we cover the short-term technical outlook on the Aussie dollar. So you're able to see what's the medium-term trend and its short-term trend that is ongoing right now. And most important is his press conference at 1:30 p.m. So market participants will be paying very close attention to the tonality of the RBA Governor Bullock, because in the last 3 to 4 conference, she's still sounding rather cautious and hawkish about the state of inflationary condition in Australia. Okay, something to keep my mind on tomorrow. And with that, that actually sum out the news flow and its respective key impact on the various cross asset classes. Okay, so before we jump into the short-term technical outlook on the dollar pair, let's take a look at the 5-day rolling performance of the dollar against the major currency. So right now I could see that this is the outlier as well. This is a very 5-day short-term trend. Dollar is now strengthening against the dollar yen, but still remains lackluster against the CAD, the euro, the Swiss, the Kiwi, the Chinese yen, the sterling pound, and the Aussie dollar. That means what you could see overall is that the dollar is still weak, I would say, as per se, among other major currency. Is the only outlier is the dollar yen. So I do believe that the dollar yen right now is being influenced by something of a positioning and technical factor that is driving this short-term mean reversion dollar rebound that we got to respect, given the fact that the macro factor still support in the longer term, means got a multi-month perspective, it still support a weaker dollar yen. It's just that only a very short-term perspective, we got to respect the technical and positioning fund flows factor that is advocating this ongoing mean reversion rebound through the break of that 143.60 level on Friday. All right, so with that, let me expand my screen so that you guys could actually see on the technical level. So starting with the euro dollar. So the euro dollar continues to actually trade in a very short term minor uptrend, still holding above the 20-day moving average after a minor whipsaw during Fed Chair Powell press conference as well. After Fed Chair Powell press conference that we saw, and price action going to inch up. And what you could see over here is that the hourly RSI continues to trade in a series of higher low, holding above the 50 level mark over here, indicating that short-term upside momentum remains intact on the as depicted by the hourly RSI for the euro dollar. So still no change, still using 111.12. That was our Titan short-term pivotal support level that we highlighted on Friday. Still maintain that intraday bullish bias after a slight dip on during the US session last Friday. Then thereafter it stabilized and starts to trade sideways and start to shape a higher low as well over here. So 111.12 short-term pivotal support, still maintain that intraday bullish bias on the euro dollar. Next near-term resistance level to watch out for will be 112 figure level, followed by 112.35 on the intraday basis for today. Only an hourly close below 111.12 will dampen today's intraday bullish bias to see the start of a minor corrective bounce to retest the 110.90/110.70 level. That was the level being supported during the US Federal Reserve interest rate decision outcome and Fed Chair press conference dialogue at that point in time. Only a break below 110.70 may see an extension of the minor corrective decline to expose much further on the downside, with the next near-term support level coming in at 110.50, followed by the all-important 110 figure level, which is also correspond to the rising 50-day moving average. Okay, so that's for the euro dollar. Sterling dollar. So the sterling dollar or the cable continues to be pretty much resilient as well on the bulls side of the story. Hourly RSI continues to actually hover above the 50 level mark, and now during the Asia session is try to actually print a higher low as well over here, so indicating short-term bullish momentum remains intact. So first support level to watch, perhaps we could use this at 132.80. That was last Friday US session low. Okay, over here 132.70, 132.80 last Friday US session minor swing low, but I do not put it this level so tight over here as my short-term pivotal resistance level, because it may get whipsaw, and this 132.60 level is much more significant. Why? Because it have much more element confluence with it. The former minor swing high of 6th of September and 17th of September now turns into a pullback support level, and as well as confluencing or coinciding with this lower limit of this minor ascending channel that I drew from the low of 11th of September. So as long as this minor pullback didn't break below 132.16 over here, we'll still maintain our intraday bullish bias on the sterling dollar. Near-term resistance level to watch remains unchanged, 133.60/133.80. Thereafter 134.35. Only a breakdown below 132.16 will invalidate today's intraday bullish bias to kickstart a mean reversion decline or a minor corrective decline scenario to expose the next near-term support level at 131.50, followed by 131 figure level. All right, so that's for the sterling dollar. Now moving our attention will be the Aussie dollar. So before we jump straight into the short-term trend of Aussie dollar using the hourly chart, let me share with you all on the daily time frame first on the Australia dollar. So they give us a bigger picture on the major and medium term trend. So this is the Australia dollar, Aussie dollar. So I could see over here is that since the low of 13th of October 2023, it has been trading in a very complex sideways range configuration. And right now, the key resistance look out for as a medium term resistance at 69 figure level. Why this level is important? Because number one, it can't break out above this level since about 1 year 3 to 4 months ago. That is on 20th of June 2023. Since hitting 69 figure level almost close to 1 year and 3 months, Aussie dollar can't see any headwind above this 69 figure level. And right now this 69 figure level also forms a long-term circular descending trend line that is from the high of 25th of February. So if I go to the weekly chart, because I don't want to skew it so tight, then it's a bit tough to see. 1 point, 2 point, 3 point over here since the high of 22nd of February 2000, 25th of February 2021. So that is close to, I would say, a 3-year plus descending trend line, confluencing at the 69 level as well. So this 69 level is very, very key. Unless we see a very clear breakout above the 69 trend level, then potentially we could start to see a medium term to major term trend phase change from sideways to upside. So right now it's more like a minor uptrend within a major sideways trend, with the key resistance of this major sideways trend at 69 figure level. Okay, so that's on the daily chart so that you guys have a bigger picture right now, the current price action configuration on a higher time frame. So now going back to the lower time frame over here, no change on the hourly chart. On last Friday, price action tested our 67.95 short-term pivotal support and staged that V-shaped recovery bounce. So still maintaining using 67.95 for sure as my key short-term pivotal support for today. Maintain the intraday bullish bias on the Aussie dollar. First resistance level to watch will be 60.50. A breakout above it will be the all important major medium term to major resistance level at 69 figure level, which I highlighted earlier on the daily chart. Only an hourly close below 67.95. There's a breakdown of an hourly close below 67.95. Invalidates today's intraday bullish bias to see a slide down towards retest the 20-day moving average. That is also acting as a confluence with a graphical support at 67.30. A breakdown below it may see a further extension on the downside towards 66.95. That's for the Aussie dollar. Now on the dollar yen, let's look at the our daily chart first to give us a bigger picture. So this is the daily chart of the dollar yen. So we know that from the July high of 161.95, it has been trading in a medium term downtrend. And what's important over here is that last Friday break of that 143.60, which is also the 20-day moving average, now sees the risk of a multi-day to multi-week. I mean, I give a rough gauge, multi-day to multi-week mean reversion rebound to retrace some portion of this medium-term downtrend. So the next two resistance level to watch will be 146.90, which is very close to the 50-day moving average, acting as a resistance, and the major medium-term pivotal resistance level, I would say the medium-term pivotal resistance level to maintain this ongoing medium-term downtrend will be at 149.30. And if you do the Fibo retracement of that entire downtrend, medium-term downtrend, all the way down to Monday, 16th of September swing low, the level also confluence with the 38.2% Fibo retracement. So what's supporting this mean reversion rebound is also the RSI that managed to actually shape a bounce back up to this formerly resistance level, now turns to a pullback support after hitting an oversold zone and still has a bit more room to go before hitting the overbought level. All right, and also we start to see a very clear over here, there's a lower low, right? At this point in time, a clear lower low here, but the RSI starts to shape a bullish divergence. Okay, a bullish divergence has been formed. Okay, on Friday after refusing to break down lower. Okay, over here, bullish divergence. After then coupled with, pardon me, a Friday breakout of the 20-day moving average. So what we could see over here is that on the hourly time frame, we were actually now got to respect the current price action using 143.70. So that was our short-term pivotal resistance, now turns into a pivotal support level. We will flip to a intraday bullish bias on the dollar yen. Next resistance level to watch in first step first will be at 145.40 slash 145.95, this graphical resistance zone here, and this dotted gray line. So what's this dotted gray line? Is the former minor trend line support from the low of 5th of August and to the 8th of August. Breakdown now turns into a pullback resistance level. However, if price action starts to come down and reintegrate below 143.70, that means price action starts to be on the bearish side of the story again for the dollar yen. That means with an hourly close below 143.70, a breakdown below it will reinstate the impulsive down move of the dollar yen to revisit 141.40 in first step, followed by the 16th of September minor swing low area at 139.70. Okay, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar pair. So now turning our focus right now will be the major US stock indices. Not the major US stocks, the major global stock indices, starting with the Hong Kong 33. So the Hong Kong 33 continues to shape a gap up in today's Asia session. So on last Friday, we have a bearish bias below 1844.30. Then first support level to watch will be 18,200, then followed by 17,950. So given the very strong push up in today's Asia session, after a failure to break down below 18,200, it seems to us that the price action has started to turn bullish again for the Hong Kong 33, at least in the short term basis. So we'll be using a very tight short term pivotal support level at 18,200, which is so close to today's intraday Asia session low. So as long as this 18,200 didn't surpass to the downside, we will flip back to a intraday bullish bias for the Hong Kong 33. A breakout above 18,430 exposes the next near-term resistance level at 18,650, which is the minor congestion area over here, the minor swing high of 5th of June and 6th of June. Only an hourly close below 18,200 will invalidate today's intraday bullish bias to kickstart off another round of a minor corrective decline scenario for the Hong Kong 33 to revisit 17,950, followed by 17,730, which is very close to the rising 20-day moving average as well. So that's for the Hong Kong 33. Now, turning our attention will be the Nikkei 225 or the Japan 225. So the Japan 225 continue to push up above our neutrality zone. So last Friday, due to mixed element, we were neutral between this 37,960 and 37,410. So breaking out above 37,960, we got to validate a short-term intraday bullish bias for the Japan 225, and also it moves in line with the ongoing mean reversion rebound of the dollar yen as well. So now it's testing the next resistance at 38,620 level. So I do not want to put it. So the next, so the before that, there could be a short-term support level over here. Shorter term support, a first support level to watch will be at this 38,170, 38,170. So but I don't put it, so I'll still use 37,880, which is also confluence with the 200-day moving average. So as long as any minor pullback didn't surpass below 37,880, short-term pivotal support that we have for today on the Japan 225, we will flip to a bullish bias on the Japan 225. Next resistance to watch after 38,620 will be at 39,270, which is this former support level, resistance level break, now turns into resistance over here, this congestion area here, and this level here where it was actually retested as a resistance on 31st of June, which is at 39,270. Only an hourly close back below 37,880 will invalidate today's intraday bullish bias to see a corrective decline scenario unfolding again, at least from a intraday perspective, to expose the next near-term support level at 37,410, followed by 37,090, which confluence with the 50-day and the 20-day moving average acting as a support area as well. Now, turning our attention to one of the major European stock index, with the German DAX. So the German DAX last Friday, we were bearish for a slide, and the slide almost hit the support level at 18,640, which is also the lower limit of this minor ascending channel that it has been oscillating since the low of 11th of September, and also just above the 20-day moving average, where it managed to shape a bounce during today's Asia session. So with that, I'll be using 18,645 as, and the RSI is now coming very close to has really almost reached the oversold level. All right. So with that, using 18,645 as my short-term pivotal support level, we will flip to a intraday bullish bias on the German 30. First resistance, intermediate resistance zone or near-term resistance zone to watch will be the all-time high area, 18,970 / 19,050, which was last Thursday high. Above the 19,050 exposes the next resistance level coming in at 19,230, which is the one-time Fibo extension, which I did over here from the low of 10th of September, push it up to 17th of September, minor swing high, project it to the low of 18th of September. That does give us the one-time Fibo extension level of 19,230, and also confluencing or coinciding with the upper limit of this minor ascending channel that I drew from the low of 11th of September. However, if price action, instead of pushing up and it starts to come down and have an hourly close and a breakdown below 18,640, then this bullish bias will be invalidated to see the extension of this minor corrective decline to revisit 18,390, which also confluence with the 50-day moving average. I think as a support, a breakdown below 18,390 sees a much further slide to retest the minor swing low of 11 and 12 of September at 18,210 level. All right, now turning our attention or our focus next to the major US stock indices, the US Wall Street 30. So the US Wall Street 30 continues to trade sideways on last Friday, but overall the trend still, the minor uptrend that is in place since the low of 5th of August still remains intact for now. All right, and as well as intact for now. Okay, as it continues to churn above the 20-day and the 50-day moving average, RSI still remains positive, and it continues to bounce off from this parallel ascending trendline support level right above the 50 level mark again over here. Okay, so indicating to us that the upside momentum still remains intact, at least in a short-term perspective. So no change, still using the 41,535 as my short-term pivotal support level. I don't put it so tight at 41,950 because just in case of any whipsaw. So as long as 41,535 short-term pivotal support holds, still maintain a intraday bullish bias on the US Wall Street 30. Next resistance level will be defined by the Fibo extension level because it's already at the currently all-time high level, 42,335 slash 42,410, followed by 42,730, which also corresponds to the upper limit of this minor ascending channel that I drew from the low of 5th of August. Okay, so that's the US Wall Street 30. Now, turning our attention will be the Nasdaq 100. So the Nasdaq 100 on last Friday returned neutral between this 19,900, 2,000 and 19,630. So what I could see over here is that in today's Asia session, it shaped a strong minor V-shaped bounce, indicating that the upside momentum has started to resume again for the Nasdaq 100, at least in the short-term perspective. And the hourly RSI also continues to actually be supported by this minor ascending trendline support and bounce off back above the 50 level mark. All right, so with that, I got to respect the current upside momentum of the Nasdaq 100, even though some of the component stocks are not so bullish at the moment in time, like Nvidia. But given the fact that this price action is indeed shaping that strong intraday bullish momentum, but at least on an intraday basis, you could see a bit of further potential push up in this euphoric move since last Thursday, using 19,630 as my short-term pivotal support level for today, flip to a bullish bias on the Nasdaq 100. Next near-term resistance to look out for after the 20,000 level will be at 20,170, followed by 20,360, which is this congestion area over here. Okay, 5th of July to 16th of July this year. Only a sudden push down back below 19,630 with an hourly close below this level, then the bears managed to actually regain control again on the Nasdaq 100 to see in first step further weakness towards 19,320, followed by 19,090 next. So that's the intraday technical outlook on the Nasdaq 100, and also sum up the intraday technical outlook for the major stock indices globally. So now turning our attention now to the commodities market will be gold XAU/USD. So for gold XAU/USD, it managed to actually surpass above 2,615. So that's our key short-term resistance level to watch out for on last Friday, where we maintained our intraday bullish bias for the last 2 weeks or so. So now, given the fact that it's now approaching the upper limit of this minor ascending channel and into some Fibo extension level as well as the 0.764 at 2,645. And in terms of the Elliott waves perspective, it has seems to be complete a minor 5-wave up from the low of 4th of September. 1, 2, 3, 4, 5 with a 5th wave target at 2,640. So given that from an Elliott wave perspective, since it's moving at the 5-wave up with 5th wave target coming in, and also top of this minor ascending channel resistance as well, there could be a chance of a much more pronounced intraday minor corrective pullback scenario that could be at play. All right, so with that, we'll be using 2,640 as my short-term pivotal resistance level. We will flip to a intraday bearish bias for a potential minor corrective pullback. So like a stretch is a pullback scenario rather than a change in trend. Okay, so right now the short term and the medium term uptrend still remains intact. All right, how do I say that? If you go to the daily time frame chart over here, the daily RSI at this point in time, yes, it's overbought, but it's not shaping a bearish divergence yet. Over here, it's still showing a higher high in line with the price action, okay, on the gold XAU/USD. So this gives us a conclusion that only a potential minor, that means mean reversion decline scenario that could only last for a day or two, all right, before the bullish pressure reinsert itself again on gold XAU/USD. So for today on the intraday basis, we want to take advantage of this potential mean reversion pullback. So using 2,640 as my short-term pivotal resistance level. So as long as this level holds, don't break out on the upside, we will flip to a intraday bearish bias basis for this potential minor corrective mean reversion pullback to play out. First support level to watch for sure will be this 2,615 level. A breakdown below this level exposes 2,591, maximum 2,575, which is the lower limit of this minor ascending channel that I drew from the low of 9th of September, and as well as this Thursday minor congestion area from 19th of September to over here, 19th of September, yeah, right after the Fed Chair Powell speech. Okay. However, if price action continue to push up with an hourly close above 2,640, then I got to respect this very strong impulsive up move that will invalidate this potential mean reversion or minor corrective pullback scenario, or we put it with the intraday mean reversion decline scenario, to see the continuation of the boost holding the fort to expose the next near-term resistance level at 2,664 and even 2,692, which is defined by the one-time Fibo extension and the 1.236 times Fibo extension level. Okay, so that's for gold, XAU/USD. Lastly will be West Texas crude oil. So West Texas crude oil continues to actually kind of churn up sideways, and now it's still holding below the short-term pivotal resistance level of 73.15. So we will still maintain a short-term intraday bullish bias, but price action now got to break fast below 71.58 level, which is considered as a potential downside trigger level. Okay, 71.58 over here level. Okay, so only a breakdown below 71.58 figure level, then it could exit from this minor sideways range to see a much more pronounced bearish scenario unfolding for West Texas crude oil again, at least in the near term on the intraday basis, to expose the next support level at 69.90/68.90. However, if price starts to push up with an hourly close above 73.15, then this ongoing mean reversion rebound should extend potentially to the next resistance level at 75.007, pardon me, at 75.07, which confluence with the 50-day moving average acting as a resistance, as well as this minor descending channel resistance that I drew from the high of 18th of July. So not minor, it's medium term descending because it's more than a month already. 18th of July minor swing high, which managed to cap previous rebound in West Texas crude oil. All right, so that's the technical outlook for West Texas crude oil, and also sum up the intraday technical outlook on the major cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today that could impact the cross asset classes? So for today is, in fact, not for today, this entire week is PMI week, where we start to see a slew of preliminary PMI figure for September. And in today's European session, which is Asia afternoon session, at 3:30 p.m. to 4 p.m., we see a slew of European countries releasing their services and manufacturing PMI data, flash one for the month of September, and the composite one that comprises of the Eurozone will be releasing at 4 p.m. Singapore time, where manufacturing continues to sluggish below 50 at 45.8. 45.6, that's what market expecting, while services continue to hold at the 52.4 level, still in expansionary mode. And as well as 4:30 p.m. will be UK services and manufacturing PMI flash for the month of September. Okay, so that could potentially impact the euro and the sterling dollar FX rate. And as well, we do see a start of Federal Reserve official speaking this week, starting with Fed Bostic speech at 8 p.m. Singapore time, and during the right after the start of the US stock market session at 9:45 p.m. We do see the release of the flash PMI data for US as well, for both the manufacturing and the services data. So do keep a close eye watch on the services data, because our market is still expecting it to be rather resilient, holding at the 55 level mark. So 55.2, that's what's market expecting. Previous month is at 55.7. Then thereafter, we have another Federal Reserve official speaking at 10:15 p.m. Singapore time, Fed Gooseby. And thereafter at 1 a.m. Singapore time, we do have Fed Kaskari speaking, another Federal Reserve official. So in fact, this week we have a slew of Federal Reserve officials speaking. Market participants paying very close attention to their assessment of the US economy after that 50 basis point jumbo cut on last Wednesday. And next Up next will be early Asia's time before the start of our daily dose, so that could impact the dollar yen as well, potentially a BOJ kind of a interest rate policy trajectory, which is the release of Japan manufacturing and services PMI flash data for September out at 8:30 a.m. Singapore time. All right, so that actually sum up today's daily dose of market insights. I'm Kelvin here signing off, wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.